This week, Jim Beach and I, along with looking at the US market and the top stocks for the week, will also investigate what is a bull and bear market and give you our thoughts on what's going on with the housing market.
And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to this week's Wealth Within Update. I am Jim Beach of School for Startups Radio and joined, as always, by Dale Gillham of wealthwithin.us. Dale, I know it's cold and rainy there. How else are you doing today?
Mate, it was snowing down to a few hundred feet, not too far away from where I live, and we're only a week out of spring, so that was a bit bad, but worst rain, or the most rain we've had in one day in 20 odd years. And well, I had the fire on. I had the heater on, very, very nice, sitting there with my toasty socks on, watching the football, which is I'm allowed to do in isolation because I can't go out. But hey, we're coping all right. Everything's fine.
Well, I hope so. And as always, everyone be safe. Pray for your safety. All right. So the market this week was sort of sideways, I would say, up a little bit. And I saw that it was truly an Apple market. I think we can say that if we took Apple out, the market would have been down maybe as much as 200 points. What did you see last week, Dale?
Yeah, look, when you look at the top 10 stocks in S&P 500, which, Apple's number one and obviously Microsoft's number two, and quite I think 7 or 8 out of the top 10 are tech stocks from memory. Those top 10 stocks in S&P 500 make up around 28% of the whole S&P 500 is. So if they're moving, the market's moving. That's pretty much what it is. And obviously Apple, I think, was up over 8% last week, I think was from memory. But basically, tech stocks really did take the centre stage as a flip from the last couple of weeks, where the NASDAQ Composite rising, 2.65% for the week. And I mean, that easily beat the S&P 500, which was just up 0.72%. And the Dow Jones was flat, just up a mere 69 points, which almost doesn't even register on the percentage scale when you're looking at where the Dow is at this point in time. But it actually closed lower than the week before. So take Apple out, you are correct, that the market would have been down. But when we look at the top 100 stocks in the S&P 500, we see L Brands and Target. They're up over 12% in the big moves. Nvidia was again up, and that was up over 9%. Synopsys and Apple were up over 8%. But then you got on the flip side Kohl's, and that was down over 19%. Back Energy and Associates down over 14%. Devon Energy, Black Energy, and TechnipFMC, they're all down 13%. So you're getting, some stocks massively rising and other stocks massively falling. And we're still getting that indecision about what the direction of the market is. We're still getting caution as well with the big end of town. I don't think the big end of town's playing at the moment. They're expecting the seesaw to tip over, and that's really what's causing this indecision at the moment.
All right. So how would you classify this market? Are we sideways, bear, bull? And can you give us some definitions of bear and bull so we know exactly what we're talking about?
Yeah, there's a lot of people asking me questions, are we in a bull market still, or are we in a bear market? And a lot of people are confused about those two terms. And so it really does pay to understand what they are. But a bull market really is, in its simplest form, consistently higher prices, and the opposite can be said for a bear market, with consistently lower prices. Right now, the market's going sideways, but what I tell people is context is actually everything. So what is the context? So if you're a day trader, that could be a bull market for you, could be just a few days up. But if you're more of a buy and hold person, a bull market is something that is, 3, 4, 5 months of rising prices before you even start to say it's a bull market. And obviously the opposite for a bear market. But a few days up or down does not really make a new trend. And this is really where I talk to investors and traders, and what I teach people is you need to trade with the trend. And there's an old saying, the trend is your friend. Wait for momentum and a trend to settle in, and then start buying, and that's what you do. But a rough guide is that a move of 20% or more in price in any direction will determine whether a bull or bear market is in play. So a 20% move up means a bull market, 20% move down means it's a bear market, but that really doesn't take into account things like time. You know, it's only price we're looking at. But I did some research on looking how long they last, and according to the people at the S&P, which does all the indices or calculates all the indices, bear markets can last on average around 19 months, with the average fall being around 40%, and the average bull market lasts around 54 months, 5 odd years, with the average gain around 173%. Now, I know you're interested to ask what was 2020. Well, obviously, we went technically into a bear market with the fall in March, but that was the fastest, smallest bear market that's ever seen on the US market. It was over in about 4 or 5 weeks. So it actually set new records. That's why a lot of experts were saying we might get a bit of a rebound and another fall over, which happened in the GFC and any other bear markets we've seen. But we've since technically been in a bull market, which really happened over 3 or 4 weeks, up into 5 weeks. And then since then, pretty much since June, we've been going sideways.
Well, we've been talking about, I don't know, for the last several months, that these perhaps are new times with new rules. And to what degree can that be true? We're in a Robin Hood, Tesla is valuable era, and who knows how long these markets will last when we see up and down swings. One thing that I kind of noticed this week, or for the last month, I wanted to ask you about this. Before, 3 months ago, we were seeing 1,000-point swings on a daily basis. We'd see 3-4 days during the week it up, down, 1,000 points. Now it seems like it's going 100 points up, 70 points, 60 points down. Does the smaller swing mean anything to you? Is it just because it's summertime and people are still on vacation just in the United States, not in Europe?
No, what it means is that the small money, and what I mean by that is more the Robinhood traders. I remember a few weeks back I said to you that they would eventually run out of money because they're all in, and they all jumped in pretty early. And in this instance, the Robinhood traders, and broadly in sense they're retail traders, they actually got it right, whereas experts got it wrong. They jumped in early, they jumped in March and April, got it, took the market up, but because the big end of town and the broader market weren't buying, because we were expecting just a secondary action to move up and then for it to fall away again, the Robinhood traders came in en masse, the snowball happened, but eventually the snowball stops. And that's what we're seeing at the moment is the Robinhood traders have got all their money and they're bought everything. There is still pockets of them buying stocks and obviously taking them to big prices, but you need the big money to follow. And the big money, what I mean by that is the big end of town, your big mutual fund managers, your big traders, your big institutions to really push into the market. And every day and every week we're seeing articles by experts in those areas saying that they're expecting the market to fall over, they're expecting, the market to crash again, but eventually it will. All markets crash and all markets go into bull and bear markets, and that's what we're going to see. But right now, the movements are suggesting that there's still a lot of indecision in the marketplace. It's not wanting to fall, it's not wanting to rise, but there's not a lot of money pushing through. And so what I would suggest is there's a lot of distribution happening, which means there's a lot of players just slowly selling shares, but not enough to push it down. And eventually, and what they're doing is taking profits. And eventually what will happen is the rest of the market will catch on, or it'll start to fall away. So I am still expecting a fall down into sort of October, probably either late September, very late September, or sort of by mid-October, I'm expecting the next low.
All right, we need to switch topics and talk about housing. I see it in just about everything that I notice. My friends in New York City are leaving, and houses in my neighborhood are selling sometimes in 24 hours. I live close to town, but certainly in the suburbs, and we have 1 acre lots with trees and creeks and things like that. So, it's the nice suburb type feel. What are you seeing in the actual data?
Yeah, I know I think it was months and months ago, we talked about this, how there's a paradigm shift and that people would be more looking at that. If you can't, people are going to enjoy working from home, and they are enjoying working from home. And, this high density housing where you have no room, your office desk, so to speak, is next to your bed, is not really good for occupational health and safety, mental health, and a whole range of things. And we are seeing a lot of people move or looking to move out of that high density. And also, we're talking about these big apartment blocks. They're basically calling them vertical cruise ships. When one person gets COVID, the whole block will get COVID. So that's also a health aspect. But has certainly been a lot of talk around the property market and COVID supporting, really forcing average Americans to really look at how and where they actually do live. And as you mentioned, there is a move to the country areas with less dense housing and working from home, because our requirements are changing. It's okay to have a little desk underneath the stairs to pay your bills and do a little bit of surfing, but we really do need, if we're working from home, something to be a bit differently. Now, sales rose, or residential real estate sales rose 24.7% between June and July. But when I saw that, I went, wow, that's amazing. But then when you look at the same period last year, the rise was only around about 8%. And what happened was just the whole, it's not unexpected, because people have been sitting on the fence or on their hands, so to speak, for some months. And in some circumstances, they may have to move because of whatever their job is or what they're doing. But what we've seen is that pent-up demand also all of a sudden go bang. And that's what we're seeing now. And we're seeing big rises in some suburbs, in nice suburbs outside the city. We're seeing companies like Apple and Google, their employees is now saying, well, hey, I don't need to go into the office anymore. I know they don't want me in the office as much anymore. So I don't have to live in Silicon Valley and pay the high prices of Silicon Valley. I can move an hour or two away from Apple. And if I need to go in the office, I can just drive in or catch the train. So, and I don't really expect things to go back to previous levels in that sort of area. And neither do some of those bigger companies. But I don't know. I know about you, but not travelling to work really is good. I mean, I've done the things where it's an hour on the train or an hour or 2 hours in the car going to work every day. I've done those sorts of things, and I love getting out of bed in my pyjamas and just going to my keyboard and just doing what I do. But it begs the question: is now the time to buy real estates, because interest rates are low and will be for some times? And that's really the big question. And I know people are moving out of those big cities and looking for bigger homes, bigger land, more space, so they can work there, but also for their health purposes. But depending on the area, prices could become overinflated. I'm not sure about what your view is on that, but I'm thinking there'll be a lot of more regional cities doing very, very well right now.
Well, yes, I think that the southern cities, Austin, Texas, and Atlanta and Nashville, are going to do just fantastic. The suburbs in those cities, I'm in one of those, just selling so quickly and getting great appreciation. I bought my house at $365. We've been here 5 years, and houses in our neighborhood are listing at $550. So we think we've gotten a couple $100,000 in appreciation in 5 years. And it's interesting to see what families are doing to make their homes, office friendly. We were lucky. We have a place for the kids to play online, and then we have a place for them to work online. My wife is in our closet, and it's a big closet, Dale. It has 2 windows in it. It's at least 100 square feet, 120 square feet. And so we pushed some of her stuff out. And she has a window overlooking the pool, so it's not that bad. But the thing that I noticed is that both Lowe's and Home Depot reported their quarterly earnings, and they were both up huge. And I see that everywhere. Those portable dumpsters that you get at Home Depot. I don't know if you have them in Australia. Yep. They're green portable dumpsters. They're bags, and they inflate, and then they come and pick it up with a crane. I'm noticing those everywhere. Just a sign that a lot of renovation is going on. So I just feel for the property A. I think property A is dead forever. If you're in an office tower now, too bad for you.
Yeah.
Let's wrap it up. What do you see happening this coming week?
Look, I think we're going to see a little bit more of the same. Given last week was just so flat, we might still see some spikes in some areas, but I'm still thinking we might have 1 to 3 more weeks up into sort of early September before we move down into October. But I'm thinking the move down is probably going to be 4 to 6 weeks long. It could be longer than that. So I would be expecting a top anytime soon. It wouldn't surprise me if we're up 1% or so next week, but it also wouldn't surprise me if we were going down. But again, not a lot of upward move at the moment. Now's the time to be reassessing your portfolio and protecting your downside in case the stocks you own are starting to fall away or do start to fall away. So at all times, protect capital. That's really what I talk about.
Great advice as always. You can find it in Dale's book and at wealthwithin.us. Dale, thank you so very much. I hope you stay a little drier, a little warmer, and that your pool doesn't sink. And we will be back next week. Say goodbye, Dale.
Thanks, Jim. Take care, buddy.
And we will be back next week, everyone. Take care and be safe and wear your masks. Take care, everyone. Bye now.
Please remember that this report is an educational tool. While Wealth Within holds an Australian financial services license, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
As Jim and I discussed there in just a minute ago on our report, the market is lacking a lot of direction. There's a lot of indecision going on. So let's have a look at the chart to see why we're actually thinking that. Now, looking at the screen, you can see there's a monthly chart on the left and a weekly chart on the right. Now, you can see here the Dow is still way below that high that it made from February after that big move down into March. Now, it really was following, really did come back to its normal momentum, but this past month has looked quite bullish after having sort of a very indecisive month through June. You can see there, not really much of a better month in July, but this month it really has taken off quite well, up 1,620 points. Now, I know Jim also mentioned we're getting smaller moves during our report. So let's bring up that weekly chart and what I'm expecting. I've left these arrows the way I have for the last weeks or many weeks from when I drew them. I think I drew them right back here in June, and you can see one of my ideas was that we'd fall away, come back, make a lower peak and then fall away. The other one was that we'd rise through up into this level. Now, it looks like that's what it's doing, but it's slowing a little bit through here. We are getting little bursts, and if we look at the market over a period of time, you can see here from that sort of May area to this current area, there's only 10% rise in that period of time. Now, we are looking or searching for a low as I was talking to Jim, so I'd expect the peak either to be happening now or within the next week or 2 weeks before moving into that sort of area into October, possibly into mid-October, before we start to find the next low. How big and how deep that low is, I don't know at the moment. I think we will probably break through that low of this one here, which was, let me bring the bar up there, 24,843. I don't think we may not go much past that, but we will go below that. And the lower it goes, to me, the better it is for more stability on the marketplace to really bring back the momentum to what we would deem normally. So at this point in time, what I'm suggesting with investors is not to be too adventurous in buying. And we've seen, as Jim said, there's a lot of smaller moves rather than big moves on the marketplace, which means a lot of the money that was going into the market is now not going into the market. People are being a little bit more cautious. The big end of town are probably selling some of their shares off into whatever demand is still there, and eventually that will tip over. Like everything, there's a supply and demand. Stocks are just supply and demand. If more people want to buy, then the price goes up. If more people want to sell, then the price goes down. That's pretty much how it works. And given the economics we're actually seeing right around the US economy at the moment, and what a lot of the things that Jim and I have been chatting about, it's probably not going to take too much for the market to start tipping over and falling away into that low into October. But right now, you don't want to be buying stocks sort of near that top for them to fall over. But hey, anything is possible, and it could still keep going up for another 1 or 2 more weeks. But again, just be cautious and make sure you set stop losses whether they be initial stop losses or trailing ones. If you're not sure how to do that, get my book, Accelerate Your Wealth. It's your money, your choice. You can get it on Amazon and through bookstores all throughout the US. So get your copy today, and we'll teach you how to buy and sell and give you a lot more confidence in that. But let's get into our questions for today. Now, the first question we have today is from Camless, who says, "Hi, Dale, love to see your work. I watch all the videos every week." Thank you very much for that. He says, "I'm interested in BA or Boeing company. Can you please help me with this? Thank you." So let's have a look at Boeing. Now, Boeing's been obviously hit hard being in the travel industry and, obviously manufacturing planes, and a lot of orders were cancelled. So you can see Boeing on the screen right now, and you can see the massive fall it had all the way through to COVID, right down to that low of $89. And prior to that, we're seeing up in March 2019, it was already falling. And so this is the interesting thing is, it wasn't COVID-19 making Boeing fall. There were lots of other issues around Boeing at the time, but you can see here the high of 446 there in March 2019 and fallen away, but it hasn't been super strong through here. Very indecisive. Bit of a move through here, came right back, but right now it still does look bearish to me. It still doesn't look like it's exciting. But if we look here and we go back, you can see it's all really just come back to that sort of momentum that it was on, and that low there back in at 102 in February 2016. Let's go to this recent one. That's $89. So it even broke that. That's how bearish it was. Would I be buying this stock right now? No, I wouldn't be buying this stock. I'd be sitting back watching, looking for a little bit more strength. And let's bring up that weekly chart just to see what I'm talking about. We've had a big strong move in 1 week, and then it drifted down. Then we've had 1, 2, 3, 4 weeks up, and then it's drifting down. So it's just bang, bang, and doing exactly the same thing. Interesting, last week it was down, it had a $12 range, closing there at 167.50. So this low here is quite critical at this point in time, that 153.41. If that gets broken, if we see a move down this week and that gets broken, then I would suggest it's probably going to come right back down to these sorts of 120 areas. So just sit back and wait. If the opposite happens and it starts to move up and it moves through that high of 189.97, then it could be it's starting to move up. But I'm not really going to get excited about Boeing until it really does break that $2.34.20 area there and prove to me it's on a more longer term uptrend. Because what could be happening if I use my tool here is you see stocks will do things like this. And they'll move up and they'll move down, and then they'll do this, and they'll just keep moving up and down, and then they'll come back, and they'll be in this sort of sideways-ish sort of pattern. And what you see is you're not really getting anywhere, and people will buy in thinking it's bullish and it'll go down again, then it'll go up again, and they'll go, oh look, I'll get out of it if it gets back to what I paid for it. Then it goes down again and they don't sell, then it goes up, and then they'll go, wow, I'm going to sell out now, then it turns around again. So you might see this whole pattern right across for a period of, could be up to a couple of years, and it's called an accumulation pattern, where the big end of town just buy slowly at the period of time to generate some position into a stock if they think long term it's going to be good. And obviously Boeing has had a lot of challenges over the last few years, and not just COVID-19, and that has been a big challenge. Obviously it's going to take years to sort this stock out, and obviously how we're going to be traveling, because there's not going to be a huge amount of international travel for probably at least 1 year, probably 2 years, and that's what the airlines are speculating at this point in time, because we need to get COVID-19 under control right around the world. And having to fly into a country and spend 2 weeks in a hotel room, not just in a city, but in a hotel room in isolation, just so you can have a holiday, that's going to be challenging to do. And I'm not sure a lot of people want to spend 2 weeks spending thousands of dollars in a hotel, not doing anything other than looking out the window what they could be doing. And so unless you're going for business, and even then it's going to be challenging, because we can do business with Zoom and other things at this point in time. So again, I'm not super excited about Boeing, and I'm suggesting it's probably not a buy right now. It might be an accumulate, or it probably could be, if you do own it, it could be a seller, or you shouldn't own it at this point in time. But let's get into the next question we have, and this one is from, if I bring up my thing, let me have a look at it. It's from Michael, who says, "Hi Dale, just finished reading your book on the weekend. Thank you. And would like to know if you would stick to the top 20 stocks in the US to invest as per your recommendation for the Australian, or is there scope to expand further given the larger number of stocks available?" Maybe a better way to ask this is, what is considered to be blue chip stock in the US? Also, would like to get your thoughts on a stock called, I can't even say this, Anheuser-Busch InBev or BUD. Just to answer the first part of your question before we look at the stock that I can't even pronounce, which is quite interesting. It's the same thing, the same philosophy. And a lot of people say to me, oh, look, can you teach me to trade the US market, or can you teach me to trade the Malaysian market or the UK market, or can you teach me to trade FX, or can you teach me to trade options, or whatever it is. Trading is trading is trading is trading no matter where you do it in the world and what the stock is. And I seriously would say that you could take the name, you could send me a spreadsheet of data on an Excel spreadsheet of a stock, a commodity, a currency or anything in the world. And as long as I've got the date, the high, the low, the close and volume of whatever that is, I don't need the name. I can actually apply analysis to it and trade it. It's irrelevant where it is. So the same rules will work in the US as work in the UK, as work in Australia or anywhere else in the world. The same buy and sell rules. So looking at the top 20 stocks, as you would have heard with my chat with Jim, the top 10 stocks in the S&P 500 make up over 27% of that index. And just buying those top 10 stocks, like I suggest in my book, by the top 10 or top 20 stocks, but buying 10 stocks, you would do better than the index funds in the US. If you bought an S&P index fund in the US, you'd do better just by owning those top 10 stocks in the S&P to keep you there. More is not better, and that was the second part of your question, because there's more opportunity out there. Think of that going into a lolly shop with a kid, an 8-year-old or 6-year-old, and looking at all the lollies. How do they make decisions when there's more choice? There's more confusion, and by confusion, because then there's a fear of not picking the right thing. And so if you've got all these different coloured lollies or different options, you're thinking, well, if I choose that, I might miss out on that if that goes, or if I choose that, this could be happening on that. So more makes more confusion. And that's really why I say to people, narrow your focus. I only need 8 to 12 stocks in a portfolio. I don't need 1,000 stocks in a portfolio. 8 to 12, that's all you need. And all you really do need, if you're looking at the US market and you are in the US and you're trading or investing in the US market, those top 100 stocks in the S&P 500, if I was running a fund over there, if I was running people's funds and trading for people, I wouldn't go outside those top 100 at all. Wouldn't need to, because there is enough opportunity there. By narrowing your focus, you actually get more confidence and more accuracy in what you're actually doing. And by doing that, you'll get better returns. But good question. Very, very, very good question. Now let's look at the stock BUD. That's easier to say with the stock ticker code. So let me bring up BUD and let me see there. Now you can see there more recently it's been more bullish. And let me just bring it up here. But it is one of those stocks that has been hit hard and gone down well and truly below its all-time lows. Back in October 2009, it hit a low here in the March meltdown down at 32. It was already in a big meltdown. It just accelerated towards the end. And I can understand why you're looking at this stock, because it has shown some bullish signs at the moment and thinking of picking it up reasonably cheap. Looking at this, we've had 1, 2, 3, 4, 5, 6. It's not too bad, actually. Bit of resistance around this sort of level there at 58.66. If I use my crosshairs, you'll see, if I get my thing out of the road so you can see it. There we go. Let me bring it out over here so you can see. There you go. So some resistance around there, around that 59, 58, 59 sort of mark. It's been rejecting a few times there. So looking at this, if I just expand that up, you can see these latest bars here. They pushed up, come back, pushed up, come back. A lot of indecision through here. If this low here at 53.65 gets broken, I would suggest the movement will be down, and that's the end of the move, and then it'll go down a bit. Because again, like I was talking about on Boeing here, when I've seen this sideways move, it's possible that this would happen on BUD, because what happens quite often on these sorts of stocks that have a big downward moves, if I use my little trend arrow tool, what you often see is you move up, but then you'll see it move right back down to where it was, down to those same sort of levels. Now, at the moment, we've had a lot of retail traders getting into the market, watching what's moving, and then jumping on those with not necessarily a lot of knowledge there. And you can see a lot of volume coming in through here after that March low. So that might have happening, but the volume's starting to drop off to more normal levels. You can see right through here. So it wouldn't surprise me if this started to fall away, and then the more it fell away, the more rampant the selling would be, coming back down to getting this sort of bottom here, or even start to do what I've said Boeing does. But right now it does look a little weak. I wouldn't be getting into it. I would be watching it carefully. If it did break through that sort of $60 area, then I think then would start to be then giving me a lot more signal that it is more bullish and more bullish for the long term. But thank you very much for that question. And thanks for sending in your questions, and thanks for watching till the end of this video. If you do have any questions for me that you'd like me to answer, just stick them down below in the chat. Please put your comments in that. If you are an Australian and you want me to look at Australian stocks, please don't do it here. Make sure you get onto the Australian report and I will answer those. But please let me know where you are in the world, if you're from the US or Europe or wherever you're from looking at it. Love to hear where you're from. Put your questions down. Let me know what your thoughts are. Remember, I do these reports every single week, so click the subscribe button now. Click the bell on the right of it too, so you know when we do upload new videos into our YouTube channel. I'm Dale Gillham, the Chief Analyst here at Wealth Within. For now, goodbye, good luck, good trading. Put a mask on and stay safe.